Welcome back to the Trading Coach Podcast. As always, I'm your host, Akil Stokes. Thank you for joining. Today, we're going to talk about the attempted assassination of former President Donald Trump and the effect that it may have on the markets. Now, before you mute or turn off or switch to the next podcast, I promise we're not going to make this a political thing. If you guys know me, I stay as far away as possible from politics. It is a lose-lose situation, talking politics, talking religion, talking money. I don't do it. So we're not going to talk about that. We're going to talk about this from a trading and an investing perspective and the effect that the events may have on the market. And this comes, I guess if you guys aren't familiar with it, there was an assassination attempt on former President Donald Trump during a rally in my home state of Pennsylvania. He was hit in the ear, and from everything I'm saying, he is okay. We actually learned about this. I was at a soccer tournament with my kiddo who won his first trophy. They got first place, and right before match 3, you can hear kind of the murmurs in the background as everyone was on their electronic devices finding out about the news. And I was going to ignore it because, again, I stay away from politics, but I got back to the chat this morning, right? I was in the Tier 1 trading chat, and I saw a question in the community about, hey, how do we think that these events are going to affect the market? And nosily, I kind of snuck in there and gave my opinion and figured, hey, I should give it to you guys as well because it is a very interesting question. And in general, when we're just from an investment kind of perspective, when we're looking for information, we're asking ourselves the question, how will X affect A? The best thing we can do is look in the past, right? We talk about this all the time with back testing and going through historical data and finding numbers, improving our edge. And I know there's a group of naysayers out there, right, that say past performance doesn't predict the future. And yes, you are right, but my comeback is always this. What's the better option, right? What is the better option, right? If you are going into a fight and all you have at your disposal is like a sharp screw, and someone makes fun of you for taking this screw into a fist fight, but what's the better option? Going with nothing or going with the screw, right? Sorry to get violent there. I guess the ultimate weapon are these fists that I have in my hand, but not everyone's built like me. Anyway, so the same thing works in the investment field, right? Realm, I guess you can say, is if we want to know how something will affect the market, the best way we can make that prediction is looking in the past. So, for example, as we dug into this conversation on the Tier 1 chat, I got another question about, hey, how do you think this is going to affect like tech stocks specifically, right? We're not going to get into tech stocks today for this podcast, but what I told the trader was that, hey, tech stocks performed extremely well during the last Trump era, last time he was president, much better than they performed when Biden wasn't president. So if I had to make a guess, I would say that this event, which I don't want to spill the beans, this event will be positive for tech stocks as well. So let's kind of dig in, right? The first assumption that I made was that investors would flock towards safe haven assets, right? Because this is what investors and traders typically do. When something kind of shocking happens, it could be something like this, it could be a natural disaster. The human nature is to flock towards safety. You know, where I got this hard-earned money, I don't want to put it somewhere where it can all be lost. What is the safest, or what are the safest assets that I can find? And we see a flood during that. And safe haven assets are basically assets that are expected to either like maintain or even increase in value during times of uncertainty or during times of like economic downturn. So think of it as being like your blue chip stocks, where you have a certain stock and you're like, hey, this stock is never going to fail no matter what happens. We could be in the worst financial situation. Everything else in the sector could be plunging, but we know this company, it is too big to fail. It is not going to fail. That is very similar to a safe haven asset, right? So what are these safe haven assets? Well, there's a lot of them out there, and I have one that's kind of controversial, which I'll get into at the very end, or the very end of this kind of ramble I'm doing. Gold. The US dollar, the Japanese yen, the Swiss franc, defense stocks, like defensive stocks, treasury bills, and the one that's up for debate is Bitcoin. I'm hearing a lot of talk about Bitcoin being pushed into that very exclusive room. I personally wouldn't have it in that exclusive room. I would have it in like maybe a closet outside of the room where I could hear what's going on, but not in the room, right? You ever been to like a meeting where you have like two different, or like a presentation, you have two different events. You have the events where the crowd is there like live and they can see the person. Then you have like the side room where they're watching it on the screen. Bitcoin's in that side room watching it on their screen. Like you can hear the cheers from the room next to you, but you're not quite in it, right? But you can kind of tell people you were there. That's how Bitcoin is. And Bitcoin, the reason that people want to put it in that safe haven class is because you look at the numbers and you look at how Bitcoin has performed in comparison to like these other safe haven assets, and it's actually outperformed them, right? But that's also no shocker, right? Bitcoin's almost outperformed everything. If you look at Bitcoin's history, it has historic gains, like 300% returns. It is crazy. So it's going to win that battle against everything. So I think the sample size is too small on Bitcoin. Only recently, and what I mean by recently is in the last couple of years, it's kind of quote unquote acted normal. So I think maybe we have this conversation in 10 years after we go through a few different cycles and see how the performance is there. But Bitcoin is something that some people are considering a safe haven. It is an alternative to the dollar, very similar to gold, right? Bitcoin is an electronic version of gold, I guess you can say. So I can see how you make that case as well. So those are the safe haven pairs. And again, what usually happens in times like this is people flock to the safe haven pairs. Now, the dollar is the ultimate safe haven, but because these events happened to a U.S. president or former U.S. president on U.S. soil, right? My assumption is that the investors would flock to the next safe haven, right? Usually, like if bad stuff's happening in the world, everyone goes to the dollar for safety. And if bad stuff is happening in America, everyone goes to the next one, like the yen, for example. So that was my initial assumption. My initial assumption would be like, hey, we are going to see a weak dollar because of this. And this is interesting. Just to take one step back, kind of the general place we're at in the market is interesting too, because we've been, this event is going to open up a time of uncertainty, right? And in uncertainty, you flock to your safe havens. It's interesting timing because we just got out of a massive period of uncertainty, specifically with the US dollar, right? We hiked rates for I don't know how long, and then we came into the year expecting a record amount of interest rate cuts. And then that number just kept dwindling and dwindling and dwindling, and to the point where many of us thought we were going to have no interest rate cuts. And at the same time, our Fed chair isn't really saying anything one way or another. Then we did think we were going to have a few interest rate cuts and then maybe one cut. And then finally this week, right? Fed Chair Jerome Powell testified the past Tuesday, Wednesday, something like that. And then we had CPI on Thursday, PPI Friday, a lot of letters and stuff happening here. But finally, he came out with a legit dovish tone and pretty much set the tone to say, we are going to we are going to cut twice, right? And the market's predicting, right, like up to 70% right now, maybe even more before these events, that there's a 70% chance that we're going to cut in September and then December. And for the first time in a very long time, we had some clarity. Like, we had all this uncertainty. Are we going to do this? Are we going to do that? Are we going to do this? Are we going to do that? Right? And finally, for the first time in a very long time, we had some clarity where it looks like this is what the market is likely to do. And we thought, we saw the massive volatility in the market because of that, and a little bit of Bank of Japan possible intervention as well. But coming off of that, we thought, okay, we finally have a clear direction on what we think the monetary policy is. We're going to see some smooth markets ahead instead of this kind of crazy bounce back and forth stuff. And then this happens. And you would think, because I said flock away, tragic event on U.S. soil to a former U.S. president, flock to safe havens away from the dollar because it's an American thing that happened. This would fall in line with the general consensus, right? Look at that. I worked on it. For you guys that saw the Trading Edge video, I've been practicing the general consensus, right? I'm so confident now in it. that we're going to see a weak dollar. We have weak dollar from interest rate cuts. We have weak dollar from safe haven dump. Boom, weak dollar. Once again, clear direction. But it's not that simple. And this is because of something called the Trump effect. So the other side of the story is this. The fact that Trump got shot in the ear, he got the iconic picture of him, kind of bloody ear, hand in the air. That's going to give him more support. That's going to increase the likelihood that he's going to win the election. I know you guys overseas, you're laughing at us, right? You're laughing at us in general because of the two candidates that we have. And you're laughing at us like, well, how can this, right? This is how we do things in America, right? Let's leave us alone. You worry about your presidential situation. Some of you guys had some weird stuff happen too. I don't talk about yours. You don't talk about ours. This is just what we've been going through, right? The pool is very small. But this is certainly likely, I think, to increase his chances of winning. If you guys don't understand Donald Trump, he's got this charisma about him. And this is what makes him so popular. He's got this charisma about him where people want to follow him. And it's this and this is kind of like tough guy type of like Rambo and Rocky, like hit in the face and you get back up and yeah, America, like one of those type of things, right? So I certainly think it's a positive for him. And a positive for him affects the market in a different type of way. And this goes back to the Trump trade era that we had and profited it pretty well off of the last time he was in president. So, or in presidency, right? The Trump trade is this. So kind of a very brief version of what he stands for, because again, I don't want to get too political with this type of stuff, but essentially Trump stands for the preservation or even the expansion, I guess you can say, of tax cuts, and increased tariffs, right? This is something that would increase inflation, which is the very thing that we've been trying to fight off. And this would cast doubts on future rate cuts, right? So again, we just got a clear path that we're going to see rate cuts. But now it looks like we're going to have a president in office that doesn't want to see rate cuts. And we're back to this uncertainty about the dollar. And again, rate cuts would be weak for dollar. Non-rate cuts or even rate hikes would be strong for dollar. And the tariff thing is going to affect a lot of places, but like just two that come off that are probably have the biggest effect, China and Mexico, I would say. So that's going to have an effect as well. We mentioned Bitcoin earlier. Trump is also pro crypto. I believe that he was even taking campaign donations in Bitcoin. I think that may not be true. I read that somewhere a very long time ago, but I can barely remember what happened last week. But I believe he's definitely pro crypto as well, right? So you look at kind of what we spoke about with Bitcoin over this year with the ETFs and then the Mt. Gox thing happening, and already looking at a cheap Bitcoin and possible longs there. This can add fuel to that fire as well. And I think we're already seeing movement in Bitcoin in trading as I record this. So what does that mean for us as traders? Well, this is where it gets boring. For me, this means absolutely nothing. From an investment standpoint, again, you can put together your common sense investment kind of ideas, and that's my preferred way of investing, common sense investing, right? Look at the information I just gave you and make a common sense decision. As far as trading, I'd like to see what the markets think first, right? We're in an interesting situation. This happened over a weekend. I'm recording this on Sunday. We're about 3 hours from the market open. Let's see what happens when the market opens, and then let's see what happens Tuesday. And I say that for one of two reasons. One, the markets are very emotional, right? So when something happens, everyone panics and goes crazy, just like in real life. Everyone panics and goes crazy, and then we kind of get more information and we make a better judgment. So like I said, we heard about the news during my son's soccer game, and all you hear is people running around, oh my gosh, Trump got shot. He got shot in the head. Trump's dead. And right, like people not knowing the information, but just like jumping to this emotional conclusion. And then like 10 minutes later, oh no, he got hit in the ear. He's fine. And like the real information comes out and you kind of change your opinion on things. The markets are the same way. So you always want to give the market some time to kind of relax. What's interesting about this weekend specifically is Japan has a bank holiday on Monday. So that's a very big part of the market that is going to be out of it. So we're not going to see the Japanese influence on this to open, which is why I say we're probably better off waiting until like Tuesday. That way you get a full New York, London, a full Asia in, and enough time for the dust to settle. Maybe more information comes out about what happened, and we can make a more informed decision. Now, lastly, with that being said, with kind of the panic and the weird stuff that happens, there is the likelihood that we can see some gaps in the market. Now, if you are unfamiliar with gaps, I want you to check out Trading Coach Podcast. I told myself I was going to remember this, Akil, 581. I think that's the number. If not, it's called The Weekend Trader, where we talk about gaps and a little bit about the fear of holding trades over the weekend because of gaps. I won't spoil the episode for you, but gaps, I think there's more fear of gaps than what needs to be, right? So fear, false evidence appearing real. I think we make more of it than it needs to. So we may see some of that this weekend as well. They are kind of rare, but this would be a situation, big news event on a weekend while the market is quote unquote closed to retail traders. This would be a situation where we see some gaps in the market. So check out that podcast if you want more information. Speaking of information, if you want more trading information, I got a lot of it. Check out my YouTube channel. Just YouTube search Akil Stokes. I do multiple videos each and every week showing you the charts, giving you some technical breakdowns, giving you outlooks and recaps of the market. I also have an amazingly big shorts section where there are thousands of short, quick, 1 minute or less videos meant to specifically help you. That's right. Enter your name here, you, with your trading. So make sure you check that out as well. All right, I'll see you guys next time. Until then, plan your trade, trade your plan. Akil out.